All right, then moving on. Now joining us on the show is Atul Kumar Rai, CEO and Managing Director at IFCI. Mr. Rai, thank you so much for joining us on this leg of the show. Well, we've been hearing since last week itself regarding the development where government is going to be converting the debentures that they actually hold, the OCDs rather, which they will be converting. Tell us firstly as to what is your reaction and what kind of stance do you actually hold in regard to that particular move?
First of all, I think in order to appreciate whatever I have to say on the subject, it is necessary to bring out what is the shareholding of IFCI, what is the character of IFCI today. IFCI has a paid-up capital of rupees 737 odd crores. As of today, government has no shareholding in this company. We were set up in 1948 through an act of parliament which was repealed in 1993. And since then, IFCI has been a company registered under the Companies Act 1956. As per Companies Act 1956, which is our basic understanding of who and what we are, a decision to convert into equity of the company can only be driven or can only be determined according to the contractual terms. We have not been communicated anything from the government so far. We have not received anything by way of the intention of the government to convert. However, there is a Press Information Bureau press release of Thursday last announcing that government has decided to convert rupees 923 crore worth of convertible debentures into equity of the company. And the second thing that it says is that hereafter IFCI will be a government company. Now there are two parts to the debenture, and I think two ways of looking at the second proposition of the government assuming ownership and management and control of IFCI or making it a government-run company. First of all, the instruments in question are two in number. The first instrument is of rupees 400 crores subscribed to by the government on October 30th, 2001, in lieu of which government has issued securities of 20 years duration to IFCI at 9.75%. The terms and conditions of this instrument stipulate very, very clearly that after 5 years, IFCI shall have the right to redeem these debentures with the prior approval of Reserve Bank of India. IFCI shall have the right to redeem. Hence, I do not understand as to how a decision can be taken, especially if the decision is unilateral and without consultation with IFCI, of converting rupees 400 crore of these debentures into equity. I do not really know legally how it can stand scrutiny and how it can be justified, what is its rationale, when IFCI has an explicit right to convert these to redeem these debentures. As regards the other instrument, the fact of the matter is these instruments have never come into existence. As per company law section 81, shareholders have never given their approval, and I think today the moot question is whether the shareholder approval will be forthcoming or will not be forthcoming. Hence, the point is, if the government is using or government is relying upon its rights as a counterparty to a contract with IFCI, that contract will have to go by the terms and conditions of those contracts. Government does not have a right as per our understanding today. However, government can always legislate. Government can government can take special recourse to the provisions under the Companies Act. Those are separate things. But as of now, I think contractually IFCI has a right to redeem one set of debentures, and with regard to the second, they have not come into existence. This is part one. Second is...
Mr. Rai, sir, allow me to come in over here just to understand what you're saying, because this is very important. It's very clear that you as the head of the institution are not on the same page as the government and wherever this PIB release is coming from. You're saying the first set of debentures, which totals about 400 crores, is a convertible instrument, but IFCI has the first right. Is it sort of a first right to redeem? Do you have the money to redeem if you were to try and exercise that right?
As I referred to the terms and conditions, I would like to rely on that. The terms and conditions states that IFCI shall have the right to redeem these debentures at any point of time after the expiry of 5 years with the prior approval of Reserve Bank of India. This is what it states. I leave it up to your understanding or inference as to whether this is a prior right or not. This is, I think, very unequivocal. It vests IFCI with a right, and this is something that we can very well do today because our capital adequacy is more than 20%. As far as cash available with IFCI is concerned, we have rupees 3,200 crores in our treasury. So 400 crores redemption is certainly not an issue from the point of view of management of liquidity of IFCI or the meeting with the norms of capital adequacy. That is exactly why I was saying the second part is equally important. If government wants that IFCI should be a government company, whether the contracts are sufficient or whether something more is required, if the intention of the government is to make IFCI government-run company, I think the contract is not sufficient.
Right,
however,
Mr. Rai,
government can always step in with the legislation.
So we'll just come to that. Allow me a quick corollary to the first part. You're saying the first set of instruments, IFCI does have a right to redeem. The question is whether the government will allow IFCI to exercise that right. You said the rest of it, because the government release talks about converting almost 900 crores of debt into equity. You're saying the next set of instruments never came into being. Didn't quite understand that. If you could explain that to us, sir.
What I mean is that government did release in 2003 actually, government released some money to IFCI as a part of restructuring of financial institutions. IFCI was one of the development financial institutions. They had some problems beginning 1990s as their business model had become suspect. Two of the other development financial institutions were allowed to convert into banks around that time. IFCI had been left with no option of converting into a bank because it never had the banking license. So there were these long-standing issues of restructuring of the debt of financial institutions, which depended upon sovereign, I would say, credit enhancement to function. So in the case of IDBI, in the case of IIBI...
So how much did the government lend? How much did the government lend to IFCI during that period of instability, if I could call it that, the 2003 period you're referring to?
The amount in question is rupees 523 crores. The terms and conditions are only what the government has issued. There is no evidence that IFCI has ever agreed or the shareholders have ever approved the terms and conditions. And as per Section 81 of the Companies Act, as I said, convertible instruments need the approval of the shareholders. The reason why this has not happened is because government has never made up its mind itself on whether the instruments need to be convertible, whether they need to be non-convertible, or whether they need to be disposed of in favor of a third party which may come into IFCI through a process of strategic disinvestment, which of course, as I said, we have gone, as you might be aware, we have gone through once in 2007. So these are the options which the government was considering. Government has never finalized what are the terms and conditions on which we should have mutual agreement.
So, right, the other part now being what a lot of media reports have been preempting the move with the kind of procedure that actually comes in. In your own conversations or in your own talks with the government, has anything come up regarding divestment? If they start holding a majority stake, anything in that particular talks that have actually taken place?
As I mentioned right at the beginning, IFCI, either at the level of CEO and Managing Director or at the level of the board, has not been consulted at all by the Committee of Secretaries with regard to the decision which we have now before us in the form of a Press Information Bureau press release. IFCI has not been consulted at any level so far.
What will you do, sir? What is the plan of action? Very clearly, you're not happy with the manner in which things have gone about in the last couple of days. But what can you do? LIC is your largest shareholder, 8.5% holding.
Yes, you have indicated as to what might happen in the sense of shareholders coming to a decision or shareholders making up their minds on this step. And again, one will have to only look at how legally all these things can happen. The main issue here would be that there would be the aspect of government assuming a shareholding to be considered, which may relate to government being considered as providing a backstop facility to IFCI once it is a shareholder. It may be also presumed as government being responsible for its development and growth, and so on and so forth. On the other hand, there is the aspect which is so far visible from the market that shareholders have not viewed this development very positively. In fact, as you know, the share might have plunged by about 20% from its value pre this announcement. So there is that verdict. I do not really know, and I don't think it is possible for me to preempt as to which way the shareholders will decide. Shareholders can decide to convert it, notwithstanding what other rights they might have. So that is certainly a possibility, but I don't think, looking at the way things are, it is to be viewed very positively by shareholders. Nor do I think does it fit in with the policy of the government, which is one of encouraging institutions in the non-government sector as far as the financial landscape is concerned. And that is the consistent policy. Government has been disinvesting in Indian institutions where it holds post-1991, where it holds a majority stake or where it held 100% stake, as in the case of banks, where nationalized banks. So I do not know how well it fits with the government policy, how well it fits with the shareholders. But I have these competing kind of considerations which I have pointed out before.
Okay. All right, Mr. Rai, appreciate your time and thanks for explaining the issues at hand to us. Let's see how this goes, whether IFCI indeed will take on the government or not. Interesting story. I mean, we don't have a history of litigation coming together from a group of shareholders. Class action suits are not really heard of. Even bigger institutional investors rarely raise their voice. Coal India versus Government of India, TCI versus Government of India, we know which way that's heading. But this one's another interesting battle, it seems.
In fact, stocks being taking a big hit on the back of all the news developments, almost 20% low on Friday. Today it's down 3.5%. But nonetheless, some clarifications coming in from the management of IFCI. On that note, it's time for a short break right now. But pharma stocks are on fire. What's working for these companies? Sarojit Kaur Nagra, VP Research.